welcome back to the channel. Today we're tackling a topic that sounds super dry on paper, but is actually a massive part of the American financial dream, or nightmare, depending on who you ask. We're talking about whole life insurance, explained, plus the average cost in the USA. Seriously, if you've ever seen a cheesy commercial during a football game, or had an old friend from high school DM you about being your own bank, yeah, they were talking about this. What's the big deal anyway? First off, let's clear the air. Most people get confused between term and permanent life insurance. Big mistake. If you want something that doesn't just poof and disappear after 20 years, you're looking at permanent life insurance. These rates? Locked in, unlike your Netflix subscription or the price of eggs. Once you sign that contract, your premium stays the same until you're literally 100 years old. But here's the kicker. It's not just a death benefit. There's a secret savings account attached to it. When people talk about living benefits, they mean the cash value. Simply put, it's a pile of money that grows over time. You pay your premium. The insurance company takes a cut. The rest goes into an account earning interest. It's basically a forced savings plan with a safety net attached to it. The real talk, pros and cons, I know what you're thinking. This sounds too good to be true. So let's break down the pros and cons. On the pro side, you've got guaranteed payout. Your family gets the bag, no matter when you pass away. Plus, that cash value we mentioned, it grows tax deferred. Now the con side, it is pricey. Like, maybe I shouldn't have bought that truck. Pricey. So you've really got to ask yourself, is whole life insurance actually worth it right now? If you're high income and looking for tax advantages, maybe. If you just want to make sure your kids can go to college if something happens to you, it might be overkill. Breaking down the monthly bill. Let's talk numbers, because that's why you're here. When you look at the average cost per month, it can be a bit of a jump scare. We're talking anywhere from $250 to over $1,000 a month, depending on your age and health. Now compare that to term insurance that might cost you $30 a month. You can see why people hesitate, but there are ways to make it more affordable. And the biggest advantage? Starting young. If you're 25 and healthy, you bet you're golden. If you wait until your 40s or 50s, the math gets heavier, fast. Location vibes. Florida, New York, seniors. Location matters too. In places like New York, regulations are stricter, which can affect your policy options. Meanwhile, in Florida, there's a massive market. Let's be real. Everyone moves to the Sunshine State to retire. And speaking of retirement, there's a huge market for seniors. You might hear it called final expense insurance. These are smaller policies designed to cover funeral costs, so your family isn't stuck with a $15,000 bill while they're grieving. It's not flashy, but it's responsible. If you don't have a massive estate but want to leave things clean and tidy, it's a solid move. So, is it a scam? No. Is it for everyone? Definitely not. It's a tool. If you want guaranteed payout and a cash account you can borrow against, it might make sense. If you just want cheap protection, stick with term. Just read the fine print before you sign anything. All right? That's the tea on whole life. If this helped you make sense of the madness, do me a favor and smash that like button. It seriously helps the algorithm. Subscribe if you want more no BS breakdowns of how money actually works in the US. Catch you in the next one. Peace.